Hey, what's up, guys? It's Jonathan here. So recently, we've seen a lot of crazy trading action on the stock market, and we've seen stocks move up almost 1,000% in a matter of a couple days, only to see them fall all the way back down to their previous trading levels. We've seen this in stocks like GameStop, AMC, Cost, Sundial, and many more. And one thing I've noticed is that there's a lot of people out there who are putting their whole entire life savings to trade these stocks with the hope of becoming rich one day. But many of these people usually end up failing and lose a significant portion of their life savings. And with all this hype going around right now about getting rich quick off of trading particular stocks, I felt like it was appropriate to make a video discussing the keys to being a successful investor. So please hit the like button for the YouTube algorithm and let's get right into the video. So I think one of the biggest things that you have to know about being a successful investor is knowing the difference between investing and gambling. And yes, when you do make an investment, you are betting that something will happen. You're not necessarily guaranteed that that will happen. So usually if you're investing in a certain stock, you're investing it with the hopes that it will go up in value. But I think the biggest difference between investing and just straight gambling is that you actually understand the fundamentals of whatever you're investing in. You need to know the fundamentals to be able to make a wise investment choice. So for me, if I'm buying a buy and hold property or if I'm buying a flip real estate deal, I'll always do the numbers to make sure that I'll make money on this deal before I buy it. Or if I'm going to go buy a stock, I'll do a fundamental analysis on the stock to make sure that, in my opinion, the stock is undervalued and the stock has room to grow in the future. And by me doing these analyses, I can make more informed investment decisions. When you're gambling, you're almost putting your money on the roulette table, hoping you hit black. And if you hit red, you lose all your money. So it's very important that you understand the difference of those two things and that you focus on investing more than you focus on gambling or just going with the hype. And one of the good things about doing fundamentals is that it allows you not to overpay for a certain asset. For example, in my opinion, GameStop is not a $400 stock. So there would be no way I would pay $400 a share for GameStop. But on the other hand, if I did a fundamental analysis and I realized that Tesla is going to be worth $2,000 a share and I could buy it today for $800 a share, then that makes sense because the fundamentals back it up. Fundamentals are very important to avoid losing money while investing. Another important thing to be a successful investor is that you do at times need to gamble. So sometimes you do need to go out there and buy a stock that you may not necessarily know very well, or you may have just a hunch about. And typically with those kind of stocks, you usually want to use a very low portion of your portfolio to invest those stocks. For example, let's just say I was going to go in at GameStop at $400 a share, and I don't know any fundamentals about the company. I don't really know anything about the company at all. I might go and get like maybe 1, 2, or even 3% of my portfolio and go gamble it on it. I wouldn't go and make it like a 30% stake of my stock portfolio because that's when you get into trouble. You could live if you lose 3% of your stock portfolio, but if you lose 20 or 30% of your stock portfolio, that could set you back if you plan to use the money to retire, or if you plan to use the money for your children's college fund or whatnot. So if you are going to go out there and start gambling, only gamble what you could afford to lose. And it's very important for you to understand your risk tolerance very well. Another thing that all successful investors do is that they diversify their money into many different assets. So for example, for me, I have about 25 long hold stocks that I like to buy. And these stocks, I'll buy them pretty much blindfolded. I'll just keep buying them. Anytime I get paid, I'll just buy them. And that's because I believe in these companies very well. But there are some companies that I have had as long holds that haven't worked out so well for me. And usually these kind of investments, after a while, I'll just decide to cut my losses and sell off my position. And that's okay. When you're investing into single stocks and you're investing into a wide array of single stocks, if you have 1 or 2 losers out of 20, you'll usually be fine as long as they're not the as long as they don't make up a giant portion of your portfolio. When you're buying single stocks in the stock market, the goal is to be right more than you're wrong. And that's very important for you to understand that sometimes you will make mistakes like you would in anything else in life. And then the fourth thing that all successful investors do is that they understand the comps. So kind of like I was talking about with real estate, is that if I was flipping a property, I would ask myself, okay, what are the fixed up properties in the same neighborhood going for? How much is my purchase price for this property? How much will it cost me to renovate it? Okay, now since I know all this information, I could determine if I buy this property at this price, am I getting a good deal or am I overpaying for it? And the same thing can be done in the stock market too. You could also do fundamental analysis on stocks to understand, oh, okay, this stock is undervalued. This stock is overvalued given my opinions and the way I did my fundamental analysis. And having that understand the comps lets you also know, like, if you do lose money, how much money are you going to lose? How much money do you think you're going to lose? And that also allows you to decide risk tolerance or determine how much of a certain stock you want as a certain share of your portfolio. And the last thing that all successful investors know is that there's no such thing as get rich quick. Even though with a lot of these stocks that run up very quickly, there are people who make a lot of money. 95% of people who get involved in that kind of trading usually lose money, and they usually lose a lot of money, especially the people who put their entire life savings into these stocks, thinking that these stocks will never go down in value. So to sum it up, pretty much the overall basis of this video is that you should know what you're investing into before you buy an investment. If you're going to go and make an investment in real estate or in businesses or into stocks or into novelty items, it's very important that you have knowledge in those areas, that you have some kind of knowledge in what you're investing in, even if you don't know the intricate details, if you just know basic stuff. So if you're buying an index fund, you should have an idea of what stocks make up that index fund. And thus having that kind of knowledge can help you make more informed investment decisions, and it can save you from making poor choices when you're investing. So I'd like to thank you for watching. If you enjoyed this video, please hit the like button for the YouTube algorithm. It greatly helps out the channel and helps push this video out to more people. While you're down there, also hit the subscribe button and notification bell so you get notified anytime I post a new video. If you have any questions or comments, I encourage you to leave a comment down below. Follow me on Instagram, TikTok, and Twitter. I try to post there every day. And thank you for watching. Until next time.